Hey guys, it's Adam Rose, Vice President Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. And today is another episode of the Mortgage Guy podcast. And today we're going to talk about renovation lending. What it's all about, what is it, how we do it, what you got to be prepared for. One thing we're definitely not going to be talking about is Travis Kelce and all the mistakes he's been making over the last couple of weeks with the whole Taylor Swift thing, because he's just going to end up being another song. So that should be interesting. So all of you guys that are following that out there, including my assistant, you just need to move on. So let's talk about renovation lending, shall we? All right. Step one, find a house. Given, right? So whether you're doing a refinance or a purchase, the house is numero uno. Once you go through the home with, if you're buying a home, you're going to be with your real estate agent. You really want to kind of narrow down what things you believe will need to be done to the property in order to bring it up to par or standard for whatever loan program that you're doing. And believe it or not, we have every option available for renovation lending. I will tell you that we've kind of narrowed it down a little bit because the way the market is and how pricing is on the secondary market. USDA renovation loans and FHA 203K are the primary loan products that you're going to be using to do this. So ones with no money down, ones with 3.5% down. So we'll just focus in on FHA 203K. That is the most common loan program out there. So you're going to go through the house with your real estate agent. We're going to try to figure out, hey, what does it need? Does it need new furnace? Does it need new HVAC or roof? Does it need new windows, flooring, painting, whatever it is? Let's determine that information. Step two, obviously getting a contract on said property is extremely important because all this work will be done for nothing if you are not in contract on the house. So we're going to get in contract on the house. In the contract, we're going to have some specific verbiage that we want to put on there talking about the type of financing the borrower is applying for and that it is contingent or subject to additional lender required repairs. And the reason we say that is because just because we have a wish list item of what needs to be done per the buyer's eyes and real estate agent's eyes, the appraiser could go out there and say, hey, you missed these items. These need to be addressed for the financing. So we always have to put that verbiage on there just so the seller and the listing agent is aware that it could be subject to change, right? And it can change your loan amount and change your approval. So 1, find home. 2, get in contract. 3, the most important piece of this, and this is the wrench, right? When we do financing, we get a lot of feedback on, the lender takes the blame for a lot of stuff, right? Whether it's inside of our control, outside of our control or not. I can tell you one thing. Our process is exactly the same with every person. Therefore, if something goes extremely fast, we don't get any credit for it. We just get, it's a great buyer. If something goes very slow, again, we get the blame for it. Our process is the same. Every borrower is different. Every situation is different. Every loan product is different. People are just different. And that's just the way it is. So the one thing that you're throwing a wrench into this whole thing is a contractor. And it's no knock on contractors out there. I know a lot of them. Some of them are fantastic. Some of them, not so much on the paperwork side, right? That's the one thing no one really likes is doing paperwork. So we have to have a contractor in the back pocket ready to go out the property to bid out this thing. That can be the slowest part, right? We can't really do our job until we have that estimate in there. Some people like to push forward, order appraisals, do all that. And then after the fact, we get this contractor estimate, send it to the appraiser. And a lot of times the appraiser is saying, hey, this is a whole new order. I want another X amount of dollars to do it. So that's what we're trying to avoid. Okay. So anyways, contractor goes out to property. All right. They're going to give you an estimate. Now, the estimate is not just John Doe writing on a scrap piece of paper saying drywall, $5,000, HVAC, $8,000, right? It has to be specific. On their letterhead, their contact information, you're going to sign it. The contractor's going to sign it. They're going to break out material, labor costs. We will coach you through this process. So I'm just giving you a broad brushstroke here. So it needs to be broken out pretty good. And then we are going to vet the contractor. And here's what I mean by that. We're going to get their profile, their resume. We're going to get some references. We're going to get their insurance, make sure they're bonded, right? We're going to do all that to make sure everybody's protected on this job. They're not going to get money and then run off, right? They have a history of doing this work. They have references that state that they're very good at what they do and they communicate. So we're going to do that part for you, okay? So once we have it all right, we got the house, we're in contract, we have the contractor estimate. I meet with buyer. We are going to disclose the loan, okay? Go through all the numbers, how it's going to operate, when we pay out monies, all that fun stuff. And then we're going to order your appraisal. All right. So the reason we do it in these steps, or I prefer to do it in these steps, is when we order the appraisal, we are going to upload that contractor estimate with the appraisal. Okay. And a couple of reasons, obviously, right? The appraiser needs to know that we're doing an FHA 203K renovation loan. They're going to know that we're financing in all these items that the contractor has broken out for us. So when they go out to the appraisal or go out to do the appraisal at the property, they know when they see those items that need to be repaired, it's already addressed, right? They're not going to make it subject to, hey, you got to repair these items before closing. The other thing is when they go out to the property and they look at this repair list, okay, I don't know, adding a bedroom, remodeling bathroom, I don't know, whatever, new granite countertops, whatever you're doing, new roof. When they go out to property, they're going to assume when they do the value, this work is done already. That's how they have to see it, because they are going to give us an after improved value. So if you're buying a house for $100,000, they may give us after the, assuming the work is already done, it might be 115, 120, whatever it is, right? And the nice thing about 203K financing is everybody always gets concerned, well, what if we don't have enough value? Well, we're allowed to go to 110% of the appraised value for FHA renovation loans. So you have some wiggle room there, okay? So we'll coach you through all that, but that's why we want to do it the way we do it. So we ordered appraisal, we got the value, all this fun stuff. So then we're going to go to closing, right? Well, it's not that fast, but those are the steps in the renovation loan. We're going to make sure everything's addressed, right? But when we close, we will draw out monies to said contractor. All right, that's the short of it. We close, everybody's done, real estate agents are out, they got paid, we're all good. And then us and the loan servicer will be working with said contractor. Every time they need a draw, we send out an inspection, they get a draw for the money, okay? It sounds easy. It's not. Okay. It does take a little bit more time, and we can coach you through all of that. But I want to make you aware that there are options out there. We have a lot of people looking at homes, with the price of homes going up, they're trying to look at a lower price point, and a lot of those lower price points need a lot of work. And so having that renovation option in your back pocket is extremely important, right? It means that we can turn this home that may not qualify for USDA, FHA, VA, whatever, into a livable home and bring it up to par for borrower standards as well, because they can add wish list items. So let's talk about that a little bit. Let's talk about the two different programs, kind of. The main one's FHA, right? That's what we're going to focus in on here. So FHA, it's called the FHA 203K. There is a streamline option. There is a full K option, okay, or a full. What the main difference is, with the streamline option, it's going to be a little bit easier, a little bit less expensive, okay, because we're dealing directly with the general contractor. Again, you want a GC, you can have one or two specialty contractors if needed, all right? We don't want to go over 3. But on this, you're going to need, the renovation budget is going to be less than $35,000, okay, to qualify for a streamline. And no structural changes or changing of the footprint, all right? Meaning we're not dealing with foundation and we're not putting up walls or tearing down walls. That is a no-go on a streamline K, okay? The flip side. Now, one piece I didn't talk about is on all renovation loans, we are going to have a contingency reserve, okay? So a contingency reserve is, let's say you have a $10,000 estimate, we're going to put an additional 10% or 15% amount on top of that for overruns or unexpected items the contractor may run into that we might be able to use. Okay, so that's what that is. So when I say $35,000 or less, that's including that contingency reserve. So you need to be around 30 grand, right? 31 grand. All right, so let's talk about, hey, what if we go over $35,000? What if we're doing structural changes? What if we're doing an addition? How's that work? So that's the full K. All right. The main differences between the two, as we kind of touched on, is that 35K mark. So not only can you pretty much do whatever you want to do on a full renovation or a full K loan, but when you do it, specifically, you're going to need a consultant involved. It's called a HUD 203K consultant. They allow you to pretty much do anything you want to do: additions, tearing down walls, ripping up walls, redoing foundations, all that fun stuff. So that's the downside to it, right? I mean, there's pluses and minuses. The downside is it costs a little bit more money. It takes a little bit more time. However, it makes the process a little bit more easy for the lender specifically and the buyer. and really even the contractor, because the consultant is going to do the actual inspection on the house. Okay, they're going to tell us what's needed to be done in order to make sure that this home meets par, and then we're going to add in all your wish list items, right? The granite countertops or new cabinets or whatever you're wanting to do to update the house to make it to your liking. So that consultant is going to work directly with said contractor. They're going to do their consultant work write-up is what it's called, and they can have the contractor actually marry up the way the work write-up reads the same as the bid, all right? So the contractor can write up the bid to match it, break out the material and labor costs and all that. It makes it a little bit easier on the contractor. They're going to be their direct contact or liaison between lender and contractor. So very cool. It makes it a little bit easier on us. They're going to manage the entire construction project, so the draws, right? After they get to a certain point, the contractor needs a draw for the work completed. They're going to inspect it, check the boxes, make sure it's all good, and then tell us, hey, we're good to send out some money. So those are the main differences between the two, just a little bit of an expense, but a little bit extra safety net back there to make sure the job is getting done and is being managed. It gives you, the buyer, a little buffer as well between you and contractor, which is always a plus, right? So that's it for us this week, guys. Remember, subscribe on YouTube. All right, check us out. Make sure you check us out on Spotify and Apple Podcasts, and we will see you guys next week.